friends, thanks for joining me. And today I want to talk really quickly, if I can, about whether or not paying mortgage interest is good. I actually got this question on my channel not long ago. Isn't it good to keep a mortgage? Because then you get to basically write off the, interest that you have, that you pay in taxes. So this is in response to that question really quickly. So I want to just, let you know first off, they actually have a really cool calculator on bankrate.com. It's called a mortgage loan tax deduction calculator. And that's actually where I get my numbers from as I was crunching all of these numbers. So don't take my word for it. Go over to Bankrate's mortgage tax loan deduction calculator and test it out for yourself. Or even better, if you have a mortgage or you're thinking of getting a mortgage, why don't you go ahead and type this in, your information and see how much of a tax deduction you actually get because of the interest that you're paying on your loan. And then you'll get a more personalized number to find out whether or not it's actually better for you with your loan that you have now, or it can even help you make a better decision on your mortgage, that you think you might be getting in the future. So anyway, for the purpose of this quick demonstration, or the first one, we're going to assume a home loan of about $200,000. The purchase price doesn't really matter because it really only matters how much the loan was. So a $200,000 home loan with just a regular standard 30-year, mortgage loan, you would pay on the first year about $7,686 in interest. According to Bankrate's mortgage loan tax deduction calculator, the amount that you're actually going to get as a tax savings from the government is $1,675. So this is really important. This is pretty much key. A lot of people have maybe a bit of a misconception that if you pay $7,686, that means you're getting $7,686 back from the government. That's not true. So what actually happens is you pay your bank a lot of money, and then the government gives you back a little bit of money. I mean, I don't know anyone, if I went up to you on the street and was like, hey, how about you give me, $7,500 and then I'll give you, $1,500. Good trade, huh? No one is going to go for that. I mean, it's by far a better choice to just keep your $7,686, rather than giving it to your bank so that the government will give you back just a little bit less. And for the sake of keeping this video as short as possible, because this is maybe not the most exciting topic in the world, I'll admit, but it's still an important one because it helps us make good decisions. I went through a ton of scenarios on who would actually benefit from having a mortgage and paying interest so that they can get this money back from the government. So I took Bankrate's mortgage tax loan deduction calculator and I tried it with a 15-year loan. It was the same. You paid less interest, but you got even less back from the government. So it's still a lot to the bank, less, back in from the government. I tried it with maybe a smaller loan. What if somebody only paid, and had a $100,000 loan on their house? Again, it was the same. What if you had a bigger loan? What if this wasn't a first-time house that you had, and you have, a dream house, and you have this big house, and you're paying a lot more interest? It was the same. You pay a lot of interest to the bank, but then you get less back from the government. It never made sense. Again, through all of these, what if you have multiple properties? What if you had rentals? It was the same. Even with rentals, if you give the government, if you paid a mortgage to your bank and it was $800 and $700 of it went toward, interest, at the end of the year, you only got a few hundred of that back anyway. It was exactly the same scenario. A lot of money to the bank, lots and lots less back from the government. What if it was later years in your mortgage? That's true. As your mortgage goes on, you're not going to pay as much in interest. This is the first year. This is how much interest you would pay and how much of a tax savings that you would get. But no, you would if the numbers were smaller, just like they were with the smaller house or the smaller loan. Yes, you paid less, but you also got less. So it was the same thing. Okay, and then the last scenario I tried, second to the last, was what about if it's from different states? Like what about states where they do taxes differently, like in Texas, where they don't really have like a sales tax, but then they have a really high property tax. It really didn't make any difference whatsoever. However you calculated the numbers, it was all exactly the same. Not to sound too redundant. You paid a lot in interest to the government and the bank, and they got very little back from the government. All right, and then the last objection that I've heard as to why it's good to have a mortgage loan is because if you have that mortgage loan, the amount that you put in your interest, you actually have to itemize your deductions in order to get that money back from the government. So if you itemized your deductions and it pushed you into a lower tax bracket, wouldn't there be a savings there? So let's address that really quickly as the last one. So I got these numbers from the IRS.com. There are different tax brackets. So if you made between $0 and $18,555, you get taxed at a rate of 10%. 10% of the money that you make goes to the government. If you make between $18,551 and $75,300, you pay a flat rate of $1,855 plus 15%. Now I want to note though, the tax brackets don't work as though when you're in the higher bracket, all of your income gets, taxed at that higher rate. That's actually not true. The first $18,555 that you make gets taxed at 10%, which is where this number comes from. So you pay $1,855 because of the $18,555 that you made. And then you get taxed at the 15% for all of the money that you make in this bracket. Does that make sense? And so if you went even higher than that, if you were one of the higher income earners here in the United States, because I don't know how the taxes work in any other country, so if you're from another country, I'm sorry, this isn't going to make any sense to you. $75,301 to $151,000, you pay a flat rate of $10,367 plus 25% on the money. Now, I know that sounds like the higher tax bracket would make it to where, well, doesn't the interest make sense to pay because you're going from the lower into the higher? No, because if you were at this rate right here, $75,300, basically the difference between these two numbers plus the standard is this number right here. So you're actually only paying taxes on the actual money that you make. And the higher that you go in the brackets, you're only paying the extra tax on that money in the higher brackets, if this makes sense. You're not getting taxed at the 25% just because you make, say $75,500 in a year. You're not paying 25% on all of that money. You're only paying the 25% on the amount above that $75,301. So hopefully this makes sense. Because it's taxed based on how much money that you actually make, and it's not the whole amount of money that pushes you into the higher tax bracket, it still doesn't make sense to have the mortgage loan, because when you write off how much money that you're actually paying and the government gives you that little bit back, it's not going to push you into a low enough bracket that you actually pay less taxes to the government. Hopefully that makes sense. So yes, there is a higher amount that you get when you are into these higher tax brackets. I went ahead and, calculated it out. So if you were in this tax bracket right here, a 25% federal tax bracket, and you had the same $200,000 loan, this amount was based on 15% tax rate. So you do get $2,382. So yes, the government does give you a bit more of it back, but still, is that an even trade? You spend $7,686 to your bank to get back $2,382. Of course, I left the cents off of all this just to make, it make more sense. So yes, pretty much, I cannot think of a single scenario under any situation or circumstance where it makes sense to actually give your bank a lot of money so that you can get a little bit of it back from the government. So hopefully this answers your question. For all of the people out there that say, doesn't it make sense to have a mortgage so you can write it off? Hopefully this kind of gave you some clarification on how the tax system actually works. It doesn't really work that way. It actually is not better. It's by far better to pay off your mortgage, in my opinion, and then have less to pay. Keep your $7,686 or how much ever it is when you go to the bank rate mortgage tax deduction calculator and figure out how much you actually pay. Just keep that money and then just get less, back from the government. There you go. So it is the first, and I need to pay my mortgage, and I can't wait to pay it because I get to pay extra toward it because I'm paying off my mortgage faster. So if that's something that you're interested in doing, paying off your mortgage faster, I'll put, some videos here. So go ahead and pay my mortgage with me. My favorite way to pay my mortgage is actually with my phone. I used to work with the post office, and I don't mean to dog on the post office, but yes, mail does in fact get lost. And there were several times when we found lost letters and things like that in the different mail equipment and stuff like that. So, I used to pay my mortgage through the mail. I don't do that anymore. I would either do it online, or my preferred method again is over the phone, and it makes it to where any extra money that you have to pay toward your mortgage, you can tell it where to put it. But you'll see that in just a second. So let's do this.
Thank you for calling our automated pay-by-phone service. Our records show that your most recent phone payment was made using a bank account ending in. If you would like to pay using this account, press 1. To enter, your loan is currently due on February 1st, 2017, in the amount of. To pay this amount, press 1. To make a payment for a different amount, press 2. Please enter the amount of your payment, followed by the pound sign. The payment amount you entered is greater than the total amount due. To apply the additional funds to your principal balance, press 1. When you say yes to the following question, your draft will be initiated. Are you authorizing this one-time automatic draft?
Yes.
One moment, please. Thank you. Your payment request in the amount of has been accepted and will be deducted from your banking account. Your confirmation number is.
See, that was easy. You can tell it that you want to have your extra principal go, or the extra payment go toward the principal. It's not going toward, your escrow account or anything else. And I know the payment's taken right now. So, yes, very easy to do. My favorite way to pay the mortgage. Get it paid off, because the mortgage isn't good, in my opinion. All right, thanks for watching. I'm Frugal Green Girl. We'll see you next time.